A lot's happening this week. May well create a little bit of volatility, so please be warned. In this video, I'm going to explain what is happening, just so you know. It affects all financial markets, including crypto, so let's get into it, right? First things first, we need to talk about it. Let me know, how many stables are you in? What have you got percentage-wise? Are you prepared for volatility? I always say have something in the market, but also have something out of the market to play the game. Currently, as you can see here, 73% is roughly what I've got, which is fine, right? If it goes up, cool. If it goes down, even better, right? So let's talk about a few things, right? So in my podcast recently, feel free to subscribe and listen if you've not yet done so. I talked about why is everyone obsessed with market bottoms and never the tops, right? For obvious reasons, this makes obvious sense. You get rewarded at the tops and you get, kind of semi-rewarded for the bottoms as well. The reality is, right? Tick box exercise, we need to know a few things, which is why this video is very, very important to you for the future. Because we need to talk about a few things. Let's talk about them, right? Economic calendar, step number 1, make sure you have one of these ready kicking about. Why? The reason being, we know what's happening. Point-based hike, right? We are expecting a 75 or 750 base points, whatever you want to know it as, incoming, right? And this is coming out in 2 days, 5 hours, and 8 minutes. Now, you can see the past here. Last recession, right? Ooh. We're going up. We're going up. And I'm going to talk about recession because it is in the thumbnail for obvious reasons. Now, open question, the Federal Reserve, White House, etc., etc., etc. in America think inflation has peaked? I don't know. I don't think they do, personally. But that's my personal thoughts. What's happening elsewhere though, right? Let's talk about it. We have also got earnings. Earnings on some significant things here. Google, Microsoft, Facebook, Amazon, the big one, the last one, Apple. We're talking about basically the top 5 companies in the tech world, pretty much in reality, let's be honest here. Now, we've also got to talk about the obvious as well. How much weight do they have? A lot. Apple, Microsoft, Amazon, Alphabet, and Facebook are in the top 8. Then you've obviously got other ones as well down there that are due earnings, such as Intel. Pretty important too. You've got a lot of companies that hold a lot of weight. The problem we've got is how close cryptocurrency and this is kind of tied. S&P 500 somewhat tied to it. The Nasdaq, very much tied to it as well. The bigger the market goes, the more interesting it becomes. This is a point. So what else is happening? Let's talk about it. So, mentioned before the White House. They have somewhat changed their wording a little bit on that last phrase. It is unlikely that the decline in the gross domestic product in the first quarter of the year, even if followed by the decline in the second quarter, indicates a recession. Now, this contradicts everything that we kind of know as information. Why? Because a recession is typically recognized as 2 consecutive quarters that have been in decline. We're getting towards that point. More than likely going to go into 3 anyways, let's be fair, because my personal thought is I think there is going to be a spending habit change due to the incoming rise of inflation really, really hitting our bank balances and actually going into Christmas and stuff like that. So we've got that situation, but for obvious reasons, we know that there was a pandemic, and yes, that was an element of a bit of a black swan. However, the market is relatively normal now. We've peaked, we're pulling back, high inflation, quantitative tightening, yeah. So that's important, right? So what does this mean for us? Well, it means a few things for us. Expect volatility. If the earnings that I mentioned before are bad, there's a chance that we are going to see a decline in the market. Pretty much simple as that. Why? We've been bouncing significantly. Now, this is crypto. Total market cap of crypto went right up to 1 trillion, somewhat turned around. Okay. Would you argue that is a bounce? Yeah. Is it a small bounce? Yeah. Not great, is it? But it's only Monday. However, that being said, the Nasdaq, huge, strong, vibrant bounce. That's what you want to see. Problem is, if the earnings are bad this week, from Tuesday to Friday, essentially, because there's not really much happening today, we may well see it go back down that way, which is going to be an interesting point because, yes, it is in a downtrend. We've got a high, we've got a low. We've got a lower high, a low. New lower high, maybe. And then are we going to go down to these levels? Now, definitely possible. Looking at these extension levels, where can we go, boys and girls? Well, early 2020, just after the crash. Or we're going to go to late 2020, maybe. But the problem is, and this is where it gets fun, if you just zoom out enough, you start to see, oh my God, look at the NASDAQ. Okay, so from basically 2010, sorry, not 2020, 2010, we've been vibrant bull market. When was the last recession? Now, I'm not saying we're going to go down 70% again, but let's just put the figure out there just to tell you a story. If we drop 70%, this sends us all the way back to pretty much 2016, 2017. You could probably argue near the COVID crash. This was the COVID crash, by the way. Mental. So are we? Maybe. Open question. Who knows, right? To look at the other side of it as well, we've got to also look at the facts of this. This is the S&P 500. Vibrant bull market. EMA crossover. You could have been in the market here and you have not been needing to get out of the market until maybe very, very soon. I think we're going to start crossing over soon. Ooh, ooh, ooh. Lovely. So that's a big, massive parameter. But again, if you zoom into this and just look, oopsie, bear with me. There we go. We have got a clear downtrend. We've got the high, we've got the lows, we've got low, high, low. Uh-oh, uh-oh, uh-oh. Today's not too bad. In terms of the futures, so far, we're rising. But it's early days, it's only a Monday. But that's a big thing. So if we are going to see these levels come in, now I do believe that we are going to go down to this 3200 level, which is a 382, sorry, on the fib, and obviously we can go much lower than that, which is where this point is, the old COVID crash, 618 levels. We've got to look at that as a point of reference, right? Just making sure you know. So what does this mean for the whole entire cryptocurrency market? Well, we'll probably follow it. Simple as that. If you're into crypto, cool. If you're into other things, cool. There's opportunity at these potential lows if they play out, which is why we need to talk about what's happened with Bitcoin. Bitcoin is very boring. You know, since the start of April, end of March, we're not really bounced. Right, let's be fair. Like, if you're calling that a bounce, yeah, fair enough. It's a big wick, it's a bounce, but not aggressive enough. Well, but this one, not really aggressive enough. Not like the NASDAQ, not like other stocks have been showing signs of life. This hasn't, and this is an important point. So, what do you think? Interesting. But for me, I think this is somewhat a little bit fake out-ish at the moment, depending on the data that we get this week. If the data is bad, expect us to go back in between this, basically below this level of support, sorry, and now act as resistance and back into this range again. If we do retest this 18, 19k level, probably expect it to get a bit ropey. Just be careful. But again, we are still in a bear market. There is nothing bullish right now for me on these higher time frames. When I look at that, the only thing is bullish is accumulation of units if you want to buy the units. But for me, I've said it before and I'll say it again, I would rather know what's happening with the Federal Reserve, potential recessions. I'd rather know those first before really jumping balls deep and going 2-footed into it, because it could be a problem. What does it mean for the rest of the market though? Look at Ethereum. Some hard rejections have been happening over the course of the last few days. You can see that very, very clear. We could be going to $2,000 with the merge kind of hype. However, that's only one side of the coin. One coin as well that's only really pumping and has been pushing. It has brought a lot of other volatility to other coins, but nothing, in my opinion, to get really excited to confirm that yes, we're going to go up for a bit longer. It's kind of just stood there, and now we're waiting on other things to happen. The news, good information, bad information. Are we going to get more interest in the market? Who knows? We need interest in the market. We don't have that, and until we get to certain price points, sorry, I don't think retail's going to come in. Anyways, that's today's video done. I am live very, very soon. Well, as per you watching this, in about half an hour, an hour's time, I will be live certainly if you're watching it straight away on my Patreon, so make sure you check out the link below. And if you've not yet done so, check out my podcast. It's definitely interesting.